I couldn't wait to speak to Frank Holmes this Monday morning. Frank, thanks for joining us.
It's been so painful.
Yes, and my heart goes out to you, Frank, as gold falls to its lowest level since June 2013. It's a 9-month low, as you know, Frank. How badly do physical buyers need to step in here, Frank?
Well, you know that actually bullion was off only 6%. It was the gold stocks, the junior gold stocks, that just got beaten up and pummeled. They were down 20 to 25% in 1 month. My empathy goes out for anyone in that space. It just is so brutal to see no bids. And it's not so much capitulated selling. It's basically in the gold equities, no bids. And that ratio usually of gold falls 6%, gold stocks would fall 12%, not 24%. So the bids all dried up. And I think that's going to create more difficulty as we go to year end. It'll be tax law selling. But let's talk about what is a big factor for gold in September. Historically is up, and it is down this year. It's the incredible run in the dollar. The dollar is up 2.5 standard deviations. When we look over rolling 12-month periods, over 3-month periods, over 1-month period, the dollar is extremely extended. The euro is taken on the chin. Japan, which will be coming with economic data tomorrow, has been taken on the chin relative to the dollar. So I think that that's a real key factor in understanding what's happening to gold, because half of the gold trade is the fear trade, and that has to do with the inverse relationship to the US dollar.
So let's look to the positive now, Frank. Let's look at opportunities that could be around the corner for gold. Let's start with physical demand to pick up ahead of the Chinese festival and ahead of Diwali, which begins in India at the end of this month, right, Frank?
Well, I think what's really positive is when we take a look at Perth Mint. You know, the Perth Mint has had record numbers, and they're selling gold into China. Gold coin or gold ingots, what I call bricks of gold, is very, very robust in Shanghai market. So we're seeing gold consumption remain very healthy in China and the Asia region. So I think that that's an important part to take a look at. U.S. gold coin sales also were up for August. So it's not all that bad in that context. But it really is a currency trade right now, what is creating this big disruption in gold.
Now, Frank, after the jobs report came out on Friday, the consensus was, yes, it's the U.S. dollar and the stronger than expected report that was adding pressure to gold. But you had a different stance. You said that those job numbers may not be painting the full picture.
Well, the full picture is that there are less and less Americans in the workforce. So how many more are retiring, and how many more are using the retirement dollars they're living off of, or they're on food stamps or other forms of welfare support? So I think the economic data is, in fact, looks better because there's less people that are working. But let's talk about this gold trade. It's really important for your listeners. It's a crowded trade. Last time gold hit these lows in percentage terms, mentioning the dollar being strong, gold being weak over just simple mathematical, totally objective models, was everyone was short. Short. And we're now seeing record short positions being established. Today I get newsletters sending me why gold's going to $700 an ounce. It's a true sort of emotional capitulation taking place. So I think that's a positive note. Gold continues to be strong in China. Perth, U.S. gold coin sales remain robust and healthy, and everyone is getting short. So we're due for this big, great, spectacular rally.
Now, Frank, on to threats. Obviously, the U.S. dollar, but could there be a positive side to the story for gold? According to UBS, the dollar's rally is due to deteriorating credit as opposed to strong growth in the United States. If true, this would mean more trouble for industrial metals, but you say gold should ultimately benefit from this outcome.
Yes, I think it's very important to take a look at these currency moves, but these other metals right across the board do impact the dollar, and they do truly impact this global competitiveness. As the dollar runs, it will help Europe be able to sell. Sell, sell, sell. So they've got to get the euro down to parity with the dollar to really be competitive, because when you go over there, it's exceedingly expensive.
Frank, the final thread I'd like to address with you involves the mining industry. Now, the average all-in sustaining cost for a mine sit around and hover around $1,200 an ounce now. With the falling prices, what could this mean for the mining industry? How much of a threat is it here, Frank?
Yes, well, I think you're going to start we're seeing supply shrink up in America. Gold production was off 10%. Around the world, I think the only serious gold production increase was out of Russia, and they've been buying all their gold that they basically produce. So I think you're going to start seeing supply shrink out of Latin America. North America, Central America as a whole will start to go through a contraction process, and so will Africa. Africa will continue to shrink its gold production.
All right, Frank, finally, as always, your touchdown pass this week.
There's lots of points to look at. HSBC's flash for China on sort of the services industry is important to see if they've turned that corner. China did come out with strong economic policies now to stimulate housing. Last week, they didn't like the data points, and immediately they come with a fiscal policy of economic stimulation, something that Europe and North America hasn't recognized the importance of fiscal stimulus beyond monetary stimulus. And this Friday in Washington is the G20 tax collectors meeting, basically looking at how can they collect taxes around the world. The only sad part is when they tax the rich, to turn around to give to the poor, only people that really make serious money are government workers and lobbyists. So the money really doesn't get to the poor, and that's always an argument when you go to these emerging countries and you hear this from the person in the street. But that's the big touchdown pass to focus on.
Frank Holmes, thanks so much for your time this Monday.
Happy investing in a bear cycle.
Thanks so much, Frank. And finally, exciting news from Kitco News. We will be heading to the Cayman Islands next to cover the Grand Cayman Liberty Forum taking place from November 16th to the 20th. Some keynote speakers include Casey, Adrian Day, and our very own Peter Hugg. So we hope you come and join us and meet the Kitco News team in person. You can register at the link below. In the meantime, we wish you a wonderful Monday.